Hey, Lordy, look at the time.
M-PWRD.
Okie dokie, so I'll just kick things off then. Welcome back to another episode of the M-PWRD podcast. Today we're joined by Dan Knott. Dan, thanks for coming in, but I'm going to let you tell us a little bit about what you do and then we'll get going.
Yeah, so I am a mortgage advisor. I work with home buyers across the country, helping them to finance properties, whether they are first-time buyers, home movers, property investors, whatever it may be. It's my job to help them achieve mortgage success. And yeah, that's why we're here today.
Yeah, so obviously bumped into each other at a networking event and speaking a little bit about what it was you do, but then talking about how you've kind of applied social media, which is something that probably isn't that typical for finance and that sort of sector, and build a brand around something that, you know, like we were saying, isn't typically something that you would see a lot on social media. So do you want to tell us why you kind of went in that direction?
Yeah, so it is probably quite an unfashionable industry to in terms of social media compared to maybe being a personal trainer, having a bar or something like that. But yeah, so my personal brand online is Dan Does Mortgages, the main account being Instagram. And I use social media essentially to connect with home buyers and to work with people who want to work with somebody like myself. Social media gives them an opportunity to view me online for 6 months, a year, 18 months, whatever it may be, until they're ready to buy. And if they want to work with somebody like myself, then they've got the opportunity to do so, whether it's by direct message, booking in the diary. Yeah, if we're a good fit for each other, it allows that to happen.
So I'd say obviously a lot of people in professional services kind of avoid a lot of social medias, especially Instagram, because they don't necessarily see it as a place that would fit. Now, a lot of people will see that other mortgage advisors on social media and take that as a cue to not be themselves. So what was it about seeing that as a gap in the market as opposed to a red flag?
Yeah, so it's a conscious step. It's a conscious effort to step away from sort of the corporate finance professional or mortgage advisor, consciously trying not to be the grey man in a grey suit who's a little bit intimidating, who's inaccessible. So with social media, that allows me to portray that, and it's not going to be for everybody, but it is definitely for a lot of people. You know, with financial services, I would say it is becoming more common, but it's still light years behind the personal trainers, for example. But I think that's probably an area where I've taken a lot of inspiration from. But yeah, in terms of getting into it, it's, you know, mortgages is quite a difficult industry to get started in because if you've got, let's just say if you've got no client base, no client bank, you know, people who get a mortgage will only get one typically once every 2 or 5 years. And if I do a bit of mortgage business today, typically I won't get paid the bulk of that for 5 or 6 months.
Right.
So when you start in the industry, it can take a little while to earn a good living. And social media seems like a no-brainer to me in terms of trying to fast track that and trying to connect with people as quickly as possible.
So what did people used to do before they were using social media, or the other people in the industry? How do they usually go about getting their first clients?
So you can work under other people who maybe will pass leads to you.
Right.
There's more traditional networking. You can work with introducers, estate agents, etc. if you're lucky enough to do so.
Does that come with additional fees though? Is that what you...
So yeah, so typically if you're working with introducers, for example, you will generally give them a little bit of kickback.
Yeah.
But even, you know, back in the day before social media, it is a difficult industry to get started in on a self-employed basis. Most people will start with an employed background for multiple years, build up a client base, and then go self-employed. I made the decision to go self-employed from the off.
So when did you actually get into that industry in general? When did you start off?
So I've worked in finance for around about 10 years, but with mortgages, I joined this industry essentially when COVID all kicked off.
Okay.
Previously, I worked in PPI, was the main sector.
Right, okay.
That was coming to an end. So before that came to an end, it was, you know, where am I going to move? And the option was, or the decision was to move into becoming a mortgage advisor.
Right. So what was the associated training with getting into that industry for people who don't know?
Yeah, so one of the reasons why I actually started was when I bought my first home in 2018. I had such a bad experience with my mortgage advisor. It was very corporate. It wasn't very personable. And yeah, it was full of jargon, and it wasn't really a good experience. So then I made the decision, right, I think I can do a better job. So over COVID, that initial lockdown one, that's when I did all of the training, became fully qualified. And then, yeah, I got started around about August 2020 in the industry.
Okay. So you realised that maybe the experience that you had, you feel like you could have done it better. You're already working in finance, so you felt like it was something that you had the necessary skill set for. And then was there things that you kind of carried forward then from your initial financial training, if you like, that you've been doing in PPI, which really like helped you with getting into that industry? Was it quite an easy transition, is what I'm getting at?
So in terms of working in finance, yes, absolutely, those skills are transferable. It's quite a high demand environment.
Right.
But as well as that, my background initially, sort of university, then leaving university, the goal was always to work in sport.
Right.
And to work with people in that way. I've always sort of been involved in sport. Well, I was involved in sport at a younger age. So generally just, you, as everybody else is, your football, etc. But working in teams, did a little bit of coaching, worked in schools, things like that. So working with people is something that sort of, it's quite natural.
Yeah.
So that was the main skill, which I thought, right, I can transfer this into mortgage advice.
Yeah.
And hopefully provide a service that is more digestible, accessible, hopefully more enjoyable.
Yeah.
So people can enjoy that experience of buying the first home.
I think it's good. Obviously, the coaching side of sports, I feel, is all about making complex and complicated things easy to understand. Unfortunately, with a lot of professional services, it tends to be the opposite. It's making fairly straightforward-ish things complicated to the average person and complex. So they just go, oh, I don't know, let me just get somebody else to do that for me. Do you feel like there's a lot of that in that industry?
Absolutely. A lot of people who do work in either mortgages or other areas of finance, the advice or information that they put online is just full of jargon.
Yeah.
And maybe they do that to appear as an authority.
Right.
Whereas I sort of do the opposite. A lot of my content online is very low-level stuff.
Yeah.
It's meant to be digestible.
Making it easy for people to understand instead of confusing them.
Exactly that, because it's not necessary.
Yeah.
It's not necessary. I'm the expert. They don't need to sort of worry about that at that stage.
Yeah.
But so it's my job to sort of simplify the process initially.
Yeah.
And then when we are working together, we can get into the nitty gritty. But hopefully it's broken down in a way that you can understand.
Yeah, we have this conversation with clients from the social media standpoint. So we work with businesses and we do training with them on social media and content creation and things like that. And one of the things with the professional services is they're always trying to like tell people about the nitty-gritty parts of what they do, especially finance, accountancy, explaining to people these changes and this litigation and that litigation. And really, people don't give a shit. They just want you to know. As long as I think you know, then I'm happy. But if you tell me everything, then one, that's going to confuse me. Two, I don't really have time to like digest all of that information. And three, that's what I need you for. I need you to take those complicated things and just deal with them. So obviously, like you were saying there with jargon, when I kind of see jargon, I almost assume that people are trying to justify their existence.
Yeah.
So do you feel like there is a lot of that in your industry, or do you feel like you definitely need to go through a mortgage broker? So why do they bother trying to be so confusing?
Yeah, so there definitely is a lot of that, especially on these sites such as LinkedIn, or when you initially meet with mortgage advisors. That experience can be quite intimidating for a lot of people. So yeah, I definitely think that is typical, and it's definitely not necessary. As you mentioned, people just want to know that I know. And then they want to maybe think, right, Dan looks like the sort of bloke I can work with. I feel comfortable with him. I'm going to be discussing me finances. They just want to know, right, whether if you follow somebody over a period of 6 months, a year, 18 months, it's, can I relate to him? Do I like him? Do I want to work with him? And does he know his stuff? So you have got to provide that value, but it doesn't need to be in a way that's intimidating or overbearing for people. And
what is the usual customer journey then? So, people, like you said, they're not necessarily at the stage to get a mortgage right now. So what does it look like? Somebody kind of entering into your sphere of influence, and then how does that journey go usually?
Yeah, so typically, people tend to approach me via direct messages, or
Yeah.
they'll book directly into my diary via the Instagram. However, a lot of the time, people have followed for 6 months, a year, 18 months, but they're not ready to buy a house. But they maybe, let's just talk about first-time buyers. They're thinking, right, I'm going to buy a house with my partner in a year and a half.
Yeah.
Let's just follow this account, hopefully pick up some information, and then if the time comes, maybe we'll give Dan a message.
Right.
So a lot of the time, people who do get in touch via the social media, a lot of the time they haven't necessarily engaged with the account or anything like that,
Right.
but they've said, we have followed you for an extended period of time. We want to have a chat. Let's set something up. An initial casual conversation through circumstances, goals, how it is I can help. Let's see if we're a good fit for each other. A lot of the time, because they have followed me for so long, would do tend to be a good fit for each other,
Yeah.
because they've chosen to work with me as an individual, as opposed to maybe back in the day, a parent would just, give you the number of a big corporate agency.
And you don't know who you're going to get.
And you'd call and you get whoever answers the phone. You don't know who they are, you haven't seen their face, you haven't met them in person, whatever it might be, and you're just working with that person for the sake of it. So it gives people the opportunity to work with who they want to work with. So not everybody's going to choose to work with me, and that's absolutely fine. Some people will prefer the big corporate name, the man in the suit.
Yeah.
But for those that do, social media means that the opportunity is there.
Well, it adds a personality to something, and it allows people to see whether they feel like they're aligned with you, and whether they'd like to have put their trust in the situation in you. Because I feel like it is a sketchy situation getting a mortgage. I mean, you see some horror stories, don't you, about interest rates going up and people not being able to afford their houses and all this sort of thing. So you really want to know that you can just have those open, honest conversations like, oh, Dan, can I afford this? Do you know what I mean? Because, I imagine, like any industry, there's going to be some people out there who'll be like, yeah, of course you can, Dan. £1,000 a month, you'll be, think about all the extra, think about all the room for activities in there. But then, actually, a few things change. And so what are the factors then? Say, for example, I'm coming to you and I'm saying, right, I'm ready to get going. This is how much my rent is. My rent's like £800 a month, and I reckon I could probably stretch to £1,000, just for example, just to keep the numbers easy. How does that work then? Do you look at that and go, right, well, we're going to have to bring that down because interest rates are lower? Can you explain? Because I actually don't know. So can you actually explain to me a little bit about how that works?
Yeah. So as mentioned, there's so much sort of misinformation or sort of scare news on the television. So people do find it quite daunting, and people do feel quite vulnerable. Because, they're showing me the bank statements, whatever that may be. Everybody's different. Maybe they don't have any credit because they're scared of it, or maybe they've got loads of credit. Maybe they've got bad credit history.
Right.
Maybe they've got gambling in their account and they don't want the missus to know.
OnlyFans,
whatever it might be. I've seen a few OnlyFans.
How's that come up there? It must have been, I clicked it by accident.
Yeah.
Shit.
Stuff like that. So they do want to, they want to feel comfortable with who they're working with, to show that to them and say, what's happening? What can I achieve? What can't I achieve?
Yeah.
Is this a non-starter, or can I buy the dream home?
Yes.
So the initial conversation, is a relaxed conversation. Where you're at with things, what are your concerns, what are your questions, and what are you trying to do? But in our industry, the answer is always, the answer is different for everybody.
Yeah.
The sort of running joke is the answer is always, it depends.
Yes.
Because it does depend. There's a different answer for everybody and every different goal. And it's difficult to give tailored and specific advice until you've seen documentation.
Yeah.
But hopefully that initial call allows them to feel comfortable enough to then provide the documentation, and then I can review that, build a file, and then state to them, this is where you're at with things. Either you can achieve this now, or if you can't achieve your goal now, this is how we can work towards it over the next 6, 12, 24 months, whatever it might be.
So they might come in and you might say, get some of that paid off, or right, go and take out a credit card now, 300 quid, and just, you don't have any credit basically. You might have to go and pay it, put money on it, pay it off on time, put money on it. So it might be that sort of advice where somebody comes in and you go, right, no way that's getting through. You need to go and fix that. This is how long it'll take. Is that generally, what sort of kind of turnaround time then? Say if somebody comes to you, how long does it, if they have bad credit, how long does it take to get that into a good? I mean, obviously, I know you're going to say it depends, but say for example, are people looking at 6 months minimum, or is it kind of if you had someone with poor credit, can they turn that around in 6 months, a year?
So just because you've got bad credit doesn't mean that you can't get a mortgage.
Right.
If you've got some events of bad credit, depending on what the severity of it is, you might be able to get a house now. It might not actually cause that many issues. For others, it might cause major issues. For those,
what are the main things they're looking at? That is it kind of like missing your rent or stuff like that? What's the main red flag?
Well, initially, the lowest form of adverse credit is arrears, which is essentially a missed payment.
Right.
Then it's defaults. Then it's CCJs.
Yeah.
And then after that, you start getting into your IVAs, your bankruptcies, of which are the more severe. And if you've got those, that really, really does impact your options. But depending on where you are on that ladder, either you can get the mortgage that you want, or it might be a more expensive mortgage than ideally you would like.
So if your credit's bad, your interest rate might be higher.
Could be, potentially.
Right, okay. I heard if you had a CCJ, you couldn't get a mortgage for 6 years.
Wrong.
Is that wrong?
Yeah, just
good.
Wrong.
Okay.
Yeah. I've actually just reviewed a file today with somebody who's got a CCJ, and they were majorly concerned about it.
Right.
The CCJ occurred just before the last time they purchased a home, and at the time that did stop them.
Yeah.
But it's still on the file, and they said, "Look, is this a non-starter? I've got a CCJ," and I looked at it, and the answer today for this individual was, you're fine. Essentially, you will be able to buy this home. You will be able to finance it because of X, Y, and Z reasons.
Yeah, I've heard people have CCJs for just a phone bill that they bumped that was just a couple of £100. So is that kind of, if that one not so bad, you've dove your company into £200,000 worth of bankruptcy worse? Is that what the sort of factors that they look at?
Yeah, so with CCJs, for example, it's typically, a lot of the time, it's parking fines. So it depends on the value of it. So with all credit,
fines.
It depends on what type of bad credit it is.
Yeah.
It depends on when it occurred. Is it satisfied? When was it satisfied? And what's the value of it?
Right.
If you have a CCJ for a tenner, that's different to having a CCJ for 10 grand.
Right.
Do you know what I mean? So
Yeah.
that can also impact.
So they really look into it on a case-by-case scenario.
Absolutely.
Yeah. Well, that's really interesting then. There's probably some people out there who are maybe putting off the thought of getting a mortgage because they just assumed that their credit would affect them. So now they've come in and you've looked at their credit and you've seen what's what. Then kind of what does it go to? Because I've heard about people, and you might have seen this before, who can't get a mortgage at the same value that their rent's at.
Yeah.
But they pay their rent every month, and it's about affordability. But well, if my rent's £800 a month, why wouldn't I be able to afford an £800 a month mortgage?
Yeah.
So what's the situation?
So the reason that typically is because how much you can borrow or how much you can get a mortgage for isn't primarily calculated on a monthly payment. Generally, lenders will lend to you around about 4.5 times your income,
Right.
with variables such as who is the lender, do you have debts, do you have kids, any bad credit history, things like that. But 4.5 times is an initial benchmark. So,
And is that your kind of gross income they lend?
Yes.
So say you earn 50k a year, they would lend you 4.5 times that.
yeah, so around about 225,000 depending on the variables.
And is that the value of the property or the value of the loan?
So that's the loan. So 4.5 times of 50,000 would be around 225,000.
Yeah. So if the house was 300k, you'd have to put down 75, and then
Yes.
you can. Okay.
Yeah, on a very basic level, obviously,
Yeah,
there can be
yeah,
adjustments.
right.
But yes, in theory. So, and then the monthly payment comes after that. So let's say if you're paying X amount a month in rent,
Yes.
but you need a mortgage of 250,000,
Yes.
then that's why you can't get the mortgage. Even if you maybe could take a 40-year mortgage term and bring the monthly payment back right down,
Right.
you can't get the loan amount that you need initially
Oh.
sometimes.
Okay. That's interesting. So once they've done all of that, then you send it off to somebody else to kind of underwrite it, and then they
Yeah.
kind of come back to say whether they've been approved.
So generally the process would be, okay, let's say somebody has got options now, they're looking to get out there and buy a home.
Yeah.
How it would work is I would review their documentation, we'll have another telephone call, and then we'll look to get an agreement in principle, which essentially where a lender runs a credit check and states, right, this person could potentially lend X amount. And that gives the buyer confidence in a budget to get out there and start viewing homes. And then when they find a home, have an offer accepted, at that time I'll resource the market and submit an application with whoever the most suitable lender is at that time. Most commonly, the cheapest mortgage available to them. Goes to the lender, they then underwrite it and then make a mortgage offer.
So interest rates then, are they low at the moment or high at the moment? Because I don't watch the news, so I don't actually know anything. I only know things that I hear other people say, and I don't trust the news anyway. Okay, so first of all, I know I've showed people on the podcast before, like the environment that we're kind of sat in, but this very much feels like a bunker, doesn't it? With like the corrugated roof and stuff. I try and avoid anything that sounds like a conspiracy theory whilst I'm sat in this bunker, because it's something like, I feel like I need to put on a tinfoil helmet and start talking about conspiracy theories, but I don't watch the news, and that's not a conspiracy, I just don't trust it. So I try to avoid conspiracy theories while we're in this bunker for obvious reasons, because I don't want to feel like I'm going crazy. But because I don't watch the news, I don't really know what the crack is with interest rates. But I do hear people talk about them and people are worried. So is that something where interest rates might be low and then they go high and now you can't afford your mortgage?
So the news, for example, the news only put out a single example of the worst possible case scenario.
So and that's the headline. News, is that?
I genuinely don't watch the news either.
Okay, cool. I have prepared some tinfoil helmets. They are. I just wanted to make sure you're on the same page.
I'm with you on that one. But with interest rates, so over sort of 2019, 2020, 2021, interest rates were at an all-time low in history. They've never, ever been lower. So if you bought a house then you were getting the lowest interest rates of all time. Now they've jumped up significantly. However, historically, they're still actually quite low.
Right.
But the problem is at the moment, they're paired with soaring house prices, cost of living crisis,
energy, all that sort of stuff.
Petrol's gone up. So they are, and it is significantly more expensive than 2 years ago.
Right.
But will they ever go back down to where they were 2 years ago? Maybe not. We can't say.
Yeah. So what's low for an interest rate?
It depends, but so what everybody can access is different. But
what's the lowest you've ever seen?
1 point low. Actually less than 1%.
Really?
Around about 2020.
That sounds good.
Less than 1%.
Less than 1%. What's the highest you've ever seen?
You can go really high. You can go really high. Well, the highest I've ever placed a mortgage with is maybe 5-point-something%, but you can get interest rates of 10% and
that's
higher.
Annually, isn't it? Because that's a decent chunk. If say you owe 100 grand, and then every year it's 5.5% of that 100 grand, right? So it's adding 5 grand onto the cost of your property. Is that right? It depends.
Very complex.
Yeah, very complex. But
yeah, it is a significant.
I was shocked at how much of a mortgage payment the interest actually is. Because when you think about it, you think you're repaying that loan, where actually a lot of it is you're paying the interest.
So in the early years of a mortgage, your monthly payment will actually be
all interest.
Just about all interest. And then once you get to the end of it, it's primarily debt that you're clearing. So initially it's, you're paying your month. Well, when people first buy a home, then they get their annual mortgage statement a year later.
And it's went down 400
quid.
Went
down 400
quid off it.
And people are gutted. But that is just the nature.
Yes. So it's like
mortgage.
A curve like this and then the opposite way.
Exactly.
Yeah. There's a lot of things to consider, isn't it? And I think that is credit to why it's so important to kind of have conversations with people and to feel like you're not badgering someone by asking them these questions.
Absolutely. So during every initial call, I always say to my home buyers or homeowners, ask as many questions as you want. It's what I'm here for.
Yeah.
Like, take as much time as you want, get everything out. There's no such thing as a silly question.
Yeah.
Just fire away. But sort of to revert it back to the social media, because people have followed me for so long and they do have that trust, they feel like they know me, that allows them to then ask those questions and go, Dan, I've got a question. I think it's a bit daft, but I'm going to fire away anyway.
Yeah.
And that's absolutely fine because it's an environment where they feel safe doing so.
Yeah.
As well as that, when you buy a home, there's so many. You need a solicitor, you need a surveyor, you need, insurances, your life insurance, critical illness, income protection. So generally, I do arrange a lot of that for my home buyers.
Yeah.
Reason being because we have a relationship where they know me. I'm not just a man on the phone. I'm not a man who maybe they don't want to work with. And that allows the process to be streamlined because it's sort of a they can get everything under one roof to an extent because we have that relationship.
Yeah. I mean, it's a huge step for a lot of people, especially if they're a new homeowner. You're looking at 25 years. You know, it's hard to, I mean, you know, how old are people when they are new homeowners? But kind of mid-20s upwards usually.
Mid-20s, mid-30s.
Yeah,
probably.
mid-20s upwards. You're looking at someone who's going to take out a financial commitment for the same amount of time that they've been on this earth. Like if they take out a 25-year mortgage and they're 25, they're taking out a financial commitment for the next 25 years, which is equal to how old they are. Which, when you think about it like that, you know, it's a huge commitment. And having all of the information available, you know, in 5 years' time, you won't feel bothered that you might have seemed like a tit when asking you a question, but you'll feel bothered if they didn't ask a question and like rates go up and now they can't afford it and they're having to look at. Do you know what I mean? So it's really good that you've kind of built that relationship with them, and I think that's, with an industry like that, it is the key. And I think that speaking to people through social media and getting across who you are as a person, I think it's probably the best thing you could have done, really. So what's next for you then? What are your aspirations within this?
Aspirations. In terms of the social media, it's just to sort of keep doing it.
Yeah.
We sort of spoke about earlier that with my social media, it's the way I view it is that the social media is a priority. Every day is to put out some form of content, whether it's a story, an Instagram reel, or to sort of build a connection to do something like this today. You know, the reason being, without the social media, I essentially don't have the business. So I try not to view it as I'm a mortgage advisor who does a bit of social media. Yeah. That has to be a priority. Yeah. At the start of every day, whatever it might be. It's like, right, I'm going to record this video, put it out, and then we can crack on with the work. So it's just to keep doing that, trying to keep, you know, putting out more and more regular content, regardless of sort of getting busier. Keep doing that as a priority to form more connections, and hopefully just to work with more people who want to work with me.
I think everything's downstream from leads, isn't it? If you've got inbound leads coming into the business, people saying, I want to work with you, I want to get a new house, this, that, and the other, it really makes things easier than having to go out and chase leads and get people in. And it kind of puts things on your terms as well, doesn't it? You know, if they're coming into you, then they've kind of agreed in principle that they're going to be doing things the way that you show people how it's kind of done, which I think is a good kind of position to be in for any business. You're working off within your own kind of parameters there. So in terms of the social media stuff that you try and put out, what is it showing people, like showing some of the customers that you've had, showing your clients, and showing like the houses they've been able to get and stuff like that? Do you do things like that to kind of show people what could be if they come to you and follow some of the guidance you give them?
So generally the Instagram reels, which is sort of the main form of content, that's as simple as it's answering a question. Essentially, it's providing some value. On the stories, it tends to be sort of the day-to-day, you know, I've worked with this client, this was the problem, this was the solution, here's the mortgage offer. Then there's obviously the reviews, testimonials, things like that, and also, you know, stuff like this or different bits and pieces I've done with the BBC, for example. It's all sort of authority building. Yeah. But, yeah, so I just try and put it out as much as possible, and quantity, in my opinion, in terms of social media, for somebody like myself, is more important than quality. Yeah. The quality, if you can do the quality, great. If you can do the quality and that doesn't impact the quantity, fantastic. But don't lose the quantity in search of putting out a perfect video every so often. Yes. Just get your iPhone out, record something, provide some value, tell a story. You know, there's a million things you can talk about in any industry. There's a million problems to solve. There's a million clients who are coming. Some are working out, some are not. Yeah. Why is that happening? There's a million things you can post, and there's a million questions that need answering.
I think as well, what people don't realise is that the quantity actually leads to the quality because you get better at it. If you put out, 5 posts per week, then by the end of the year, you're looking at 250 posts. By the end of those 250 posts, you'll be so good at putting quick things out which look a certain way and which follow your kind of brand guideline, and you'll see what works as well. If you only put out one post a week but it's really good, you've only got 50 posts to see what really works. And you know, by the time you've done 10 weeks of posting 5 times a week, you're at the same level as if you'd posted once a week for a full year in terms of your ability to refine the processes that you use to create content. And I think that people overlook that and they don't quite realize, because until you've made a lot of content, you don't. Like, you'll now have apps on your phone and things like that which you've stumbled across or really perfected shortcuts in, and that's really helpful because, like you said there, it allows the most possible people to see you, the most possible people to understand what it is that you offer, and get some advice from you as well, because I feel like you're more likely to buy from someone that you feel like they've created some value for you.
Absolutely. And as long as you're sort of appearing on the feed every day, you sort of, it's on the feed it's Dan Mortgages every day. So then, you know, in 12 months' time, or when a friend needs a mortgage, hopefully that thought's in their head. And hopefully they do give you a thought where they think, right, maybe I should give Dan a message on social media. But in terms of, you know, other people doing social media, a lot of people worry about the quality, as you mentioned, too much. And it's sort of, you know, ultimately, I always say, nobody cares if it's not the perfect quality. That will come. Just put it out. You know, nobody's going to sleep at night worrying about your video because it wasn't edited very well. Like, nobody's that bothered. So just get it out there and show a bit of personality, provide a bit of value. And as you said, the editing skills or whatever it might be will slowly come. And I'm not a good video editor, but I do enough to put out a piece of content.
Well, you get better. And then you realize what it is that people want to see, because you can start saying, wow, I posted that and I got a few people engaging with it. I got a few people messaging me off the back of it. And then the problem is that especially in an industry like yours, it's that delayed gratification. Like you said there, it can be 18 months until they're actually in the position to start engaging with a mortgage advisor. But it's difficult, because if you just went off of the results within a couple of days of posting that, you know, we live in a instant gratification, don't we, where people want that result straight away, whereas actually, you know, like you've said then, and it's good because you've came to terms with the fact that it might be this time next year that person who followed me last year gets in touch and sets it up. And
with social media, you can't expect anything instantly to come back, because people do need to take time to get to know you. A way to think of it is, in my opinion, if you're putting out a lot of content, let's say you plant a sunflower, the more content you put out, that's not going to grow any quicker, because people still aren't ready to buy a home. So you're still going to have to wait 18 months for that to grow into flower when they're ready to buy and work with you. But the more you put out, the more sunflowers you're planting. And then, you know, different times they're going to pop up, and then these opportunities will come. But yeah, on an individual case basis, the more content that person, you can't convince somebody to buy a home. That's not what we're here to do. You're convincing them, or hoping, or you're offering the chance to, when they are ready to buy a home, to work with you if they want to.
You can't strong arm somebody who doesn't want to buy a home.
No, that's not the aim. I'd buy a home now.
Just start like hanging around their house saying how shit it looks. Shit, this way, you should move from here. How long did it take you then between setting up to getting your first client across the line and everything, just so people can get a bit of a, because you know some of them are quicker. You are going to catch someone who's qualified lead and stuff. So how long did it actually take you to set up to first deal across the line?
Okay, so with the social media, when I set it up, I actually had a plan that I was going to post every day for 6 months, with the idea of doing it for free and getting nothing back, because that's what I feel like you've got to do. But maybe it probably took a few months of posting every day before people start then giving you messages and saying, right, either I'm looking to buy now or I'm looking to buy next year, let's have a chat. But in terms of people coming through the social media, it's definitely, it wasn't a case if I posted something one day and then somebody decided to work with us. It doesn't, and it didn't work like that. So,
But how long from you setting up to the first one across the line? Can you remember?
So in terms of the So in terms of getting, as in becoming a mortgage advisor and then doing the first bit of business, probably 2 or 3 months. Probably 2 or 3 months in, and then due to the nature of the business, they're probably not going to complete on that purchase for 6 months.
Right.
So you're not going to get paid the bulk of your money until 6 months later.
Right.
But I would say from becoming an advisor, 2-3 months, that's when business starts to trickle through.
So you set up, you got qualified. How long did the getting qualified take?
So it was lockdown one.
Lockdown one. That's 3 years ago, you know. I think 3 years ago, yesterday or day before.
Yeah, it was.
That's
so
mental.
Lockdown one was the sort of the proper lockdown.
Yeah, the real one where we cared.
So all I did was study. I did was study. So
where
it was
I
sort
actually
of,
believed in it.
Yeah, exactly. You couldn't go to the shop. You couldn't even go on a walk.
Yeah, spying on your neighbours. He's been out for 2 walks.
Yeah,
I remember that.
Exactly.
Yeah.
So, although that was quite bad and it was really bad in so many ways.
Yeah.
For me, it gave me the opportunity to go, right, I'm focusing on this.
And make the most of it.
So it was a few months of studying by myself, and then I also signed up for a couple of courses when courses reopened back up. So fast track, a week course here, a week course there. Then I was qualified sort of by June, July time, I believe.
Okay, so it was about 4 months.
Yeah, something like that.
What is the qualification that you need?
So it's called CMAP.
Right.
What I would say is with CMAP in the mortgages industry, it's a qualification and it's what you need to get your foot in the door, but it doesn't teach you how to do the job. You need that day-to-day experience of working with people, like anything.
We say this about personal training courses that we've ran. It's just like it's just like learning to drive.
Yeah.
You know, it gives you the actual foundation of things that you need, but you can't hone those skills until you're out in the field. It's like a simulator. You know, it's all well and good, but then there's things that you need to actually get into the real life situation.
Yeah.
What do you think could have been better then in the course that you did to prepare you a little bit more for the real world situation? Because it's difficult, isn't it?
So this does exist. There's sort of a middle ground qualification where you get your basic qualification, and then you do some sort of real life 10 cases or whatever it is, 10 mortgages. You get that experience outside of actually placing people's mortgages within a business. So that does exist, but I don't think many people actually do that. But in an ideal world, you know, if there was some sort of middle ground training or qualification which give you day-to-day experience working with people, answering questions, I think that would probably...
Is it available as an apprenticeship?
I believe it will be, or in some form within businesses.
This is the sort of industry which lends itself well to that. Working with people, loads of objections, loads of situations that you really just need to be in to understand them, and you just get that real world experience where you're following someone who's done it before, done it for years, knows the ropes, knows what people are going to say, know what the general objections are going to be at this point and that point, and they can just kind of guide you through it, and you work under their wing. You work under their wing and just get an experience for that. Would that be something that you would potentially do if you kind of expanded, look to kind of go down that route and bring people in kind of underneath you learning the ropes?
Yeah, so something I have considered for the future is that an ideal way for somebody to become a mortgage advisor, in my opinion, is just to work within the business, whether it is initially as in an admin role for a couple of years, and just seeing the day-to-day of calling lenders, calling solicitors, being on the phone with clients. What are the problems day-to-day? What are the problems I'm dealing with? How am I resolving them? What's the time scales? And if you work in that role for a couple of years, 3, whatever it might be, for maybe longer, and then you can potentially move on to I understand the day-to-day. Now let's get the qualification and then work specifically within the advice space.
Yeah. My biggest advice to people if they want to get into an industry is find someone like yourself and just, if you want to become a mortgage advisor, hi Dan, seen your stuff, think it's really good. Would you mind if I come and shadow you?
Yeah.
I'm thinking about becoming a mortgage advisor. I'll help out. I'll do whatever you want. I just want to see what you're doing. Just shadow you and get a good understanding of what it is that you do, the day-to-days, and I'll help out if there's anything that I can do to help you out. And then I'll start doing my training.
So on that note, when I first came into the industry, I probably should have mentioned, I literally emailed just about every mortgage brokerage in the Northeast, and part of that was, look, I'm willing, I was still working my previous job at the time, I'm willing to come in 2 days a week, just do it for free, see the day-to-day, help you out, see what happens. That's essentially is actually how I started.
So did you manage to do that with anyone?
So I started with a business, and I actually did the first couple of months, as mentioned, was just shadowing, essentially. It's, Dan, can you do this phone call for me? Can you speak to this client? Can you do this research? Can you complete this documentation, whatever it is? And I think, it is essential.
Yeah. Do you know what? In the past, couple of podcasts that we've been doing, there is really a theme starting to appear with everybody that we're speaking to, and it's doing stuff for free. It's getting in, and it's showing willingness, and it's trading the asset that you have at the time, which is your time. That's the asset that you can afford when you first get into something, because you might have a bit of free time, or your time isn't as valuable. Like your time back then, you wouldn't class it as valuable as it is now, that sort of thing. And it's just showing that willingness. And I think the thing that I'm seeing from most of the people that we've got on who are, doing big things in their industry, is that they are willing to just pull their sleeves up and just go and learn from someone else doing it. And they don't have this kind of handout nature of like, oh, I've done something, give me something. It's like, I have gave you something, I've gave you experience. Yeah.
And I think you've got to give people a reason to want to work with you. You can't just expect everything on a plate. Like, I'm going to get my qualification, then I'm going to be in the industry.
Oh yeah,
I'm
so
going to
many
have
people
a career.
think that with every industry. That's like, I'll get that, and then it's just like, I'll just roll out of bed one day and I'll have loads of clients.
Nah, you've got to turn up, and you've got to do that extra. Even if you maybe not getting financial gain from it initially, that will come down the line. And obviously, it's easier to do depending on your situation, depending on where you're at with things. But to some extent, there's generally something extra that you can do. If you can get in for a few hours, and just say, can I sit there day to day, do a few calls for you, whatever it might be. I think that's essential.
Yeah, obviously everybody's situation's different, and I understand that. But most people who are trying to get into something different, they need to kind of cut back on something else and just do that. Go and shadow after work. Go and see what you can learn from somebody else. Make yourself useful, and then when opportunities come, people in business generally are sound. If an opportunity comes up, they'll give it to you if you've kind of provided them with some value. But I'm glad that you said that. I'm glad that you spoke about the shadowing there, because I think that's a huge thing. So obviously I think it's been really valuable, kind of especially going through some of the bits on mortgages and the way that you address, do your social media. So where can people find you on social media and stuff? So
the main account I use is Instagram, which is @DanDoesMortgages_. Facebook is DanDoesMortgages. They're the main two accounts. LinkedIn, Dan Knott. So people can either just send a direct message if they do want to have a chat, or there's a link to book into my diary. So whatever works for the individual. Definitely.
Well, anybody who is looking to kind of either get their first home or move or whatever, I think obviously you can see that Dan actually cares about what he does, so I think it's important. But thank you so much for coming in. Really appreciate chatting to you, and I know who I'll be coming to when it's time to move.
Perfect. Yeah, thank you very much for having me on. I've enjoyed it.
Spot on, mate. Thanks a lot. Cheers, guys. Take it easy. See you all next time.